Hi everyone, welcome back to Saheb Academy. Today in this video of material costing chapter, we are going to understand what is meant by inventory stockout, how do we treat this in cost accounting, and then we are also going to solve a problem on this from the ICAI study material. Okay, so let's just begin. Let's just understand what is this stockout. Now see here, the concept of stockout is very simple and straightforward. It basically means that we are out of stock. We don't have sufficient inventory to be supplied to our production department, to do the production, and we don't have enough finished good to be sold to our customers, right? So this is the situation of stockout. See here, stockout is said to be occurred when an inventory item could not be supplied due to insufficient stock in the store. Is that clear? Simple and straightforward. Now, we have to understand properly the entire story of stockout. So see this example over here. Let's just say, for example, this is our inventory, the whole stock. It was at, let's just say, 1800 kgs at maximum level. And then, we were sending the inventory to production department for consumption, to do the production, and it was getting depleted, and then it got depleted to 1000 kgs, and 1000 kgs was our reorder level. Okay, so what do we do when our inventory reaches at reorder level? You all know we place a fresh new order, right? And immediately we do not receive the order. You all know that we place a huge quantity order and it takes time the order to be delivered. Let's just say on an average it takes 5 days, and this is called as what? Delivery period, shipping period, lead time, reorder period. Okay, so many terms are there. Fine. And you have to understand that it's not sure that we are going to receive the order in 5 days only. It can be early also, 3-4 days, or it can take more than 5 days also. The seller has told us that the order will be received in 5 days, but it can take more than that also, right? 6, 7, 10 days, 11 days. We don't know exactly. Fine, we are uncertain about it. Is it clear? Yes. You also know this, right? When you order from Amazon, Flipkart, what happens? Sometimes you get it within, the promised time, or it can be delay also. Is that clear? Yes. So now we are waiting for our order. We are waiting for our order. In this time, our thinking is that whatever stock right now we have at 1000 kgs, reorder level stock, this will be enough during lead time. This will be enough for the consumption during lead time. What does that mean? It means these 1000 kgs will be enough for the production department. During the lead time, during these 5 days, production department will not face any shortage or anything. Production will be running smoothly. We will be sending out the materials from this 1000 kgs only, and it will be enough for the production department. This is our thinking. When we set the reorder level also, we think that the stock below the reorder level, this 1000 kgs, will be enough for consumption during lead time. Is it clear? Yes. But now let's just say what happened was we received an order from the customer, and our production department, our factory, is in need of, let's just say, 1500 kgs. More than what we have. We have only 1000 kgs. Production department need 1500 kgs of raw material. So in this case, we have a stock out. Do you understand? The demand for raw material is 1500 kgs. We just have 1000 kgs. It's not enough. So we have a stock out. This situation is called as stock out. See here. Now let's say due to a sudden order of customer, our factory is in need of 1500 kgs of raw material, but we just have 1000 kgs. So we have a stock out. What is stock out? Consumption during lead time exceeds, or it's more than the reorder level. Our reorder level is 1000 kgs, but the demand which has come is 1500 kgs. We have a shortage of 500 kgs, isn't it? Stock out units is equal to consumption during lead time. Consumption during lead time is how much? It is 1500 kgs. 1500 kgs demand has come. So you'll have to take that minus reorder level. reorder level. That means whatever we have right now at the reorder level, we have only 1000 kgs. So when you subtract that, you found out 500 kg shortage is there. So we cannot supply these units due to insufficient stock in the store. Is it clear? This is called as the situation of stock out. When it is said to be stock out, when consumption during lead time, or you can say demand during lead time, is more than reorder level. And to calculate stock out unit, you just have to subtract these two. Okay, consumption during lead time minus reorder level, you will get the shortage. Now we have to understand what are the consequences of the stock out. Yeah, if stock out happens, yeah, 500 kgs is in shortage, we cannot supply, what do you say, to production department, then what will happen? We have to understand that. See, it's really simple. Consequences of stock out. Yeah, we don't have 500 kgs, we don't have material, yeah, raw material. Because of that, production will not happen. If production doesn't happen, then understand we will lose our sales. Yeah, we will lose that customer. That customer will go to another factory and he will get his order fulfilled over there, isn't it? Yes. Yeah, so we will lose profit, yeah, contribution, and then reputation also will be lost of our organization, because we couldn't fulfill the order, isn't it? Yeah. So there are financial consequences as well as non-financial consequences, isn't it? We are losing customer, we are losing reputation, goodwill of our organization. So that's non-financial. And then see here, if production is not happening, then understand labor is sitting idle. Yeah, idle time increases. In labor costing, you will learn if idle time increases, yeah, it's called, here the problem is with the management. So abnormal idle cost, this is called. Okay, so this will be a loss which will hit costing, profit and loss. Okay, and then if there is no production, then what will happen? Fixed overheads such as rent, salary, depreciation, insurance, all these costs will be what? Go unutilized, because production is not happening. Fine. Yeah, so these are the consequences of stock out. Okay, so what the organization do is, whenever there is a stock out, then they calculate the cost of the stock out, the cost. Okay, see here, now considering all these consequences and many other factors such as period of stock out, average units sold per day, price or profit per unit, yeah, all these are the factors that they consider to calculate the stock out, how much money we are losing because we have a stock out. Yeah, so they calculate the cost of stock out in real life. But right now in CA syllabus, we don't have this calculation of cost of stock out. No, it will be directly given to you. Here you just have to do probability analysis. You just have to analyze the risk over here. Okay, yeah, we'll see what you have to do in this syllabus. Fine. For exam, what will happen is, here cost of stock out per unit will be given to you. It will be estimated and it will be given to you in the question itself. You just have to use it. Okay, fine. So this is the thing. So now you have to understand what is the objective to learn this topic, which is called as inventory stock out. Yeah, what is our objective? See here, our objective is to study the risk of stock out, yeah, through probability analysis. Don't worry, little bit mathematics is there. It's very simple. I will teach you. It's nothing. Okay, so what we do is, we use the probability analysis to forecast, yeah, to forecast the stock out. Fine. Based on the past history, we'll analyze and we'll see how much stock out can happen in our organization, right? So that we are better prepared when stock out actually happens and we are able to save the stock out cost. I told you now, there are consequences of stock out. When stock out happens, we lose so much money and time and everything, right? So that is why, to save the stock out cost, we have to do the risk analysis. Okay, we have to do the forecasting of stock out. And how will we do that? Based on the past history of stock out. Yeah, we'll have the data and everything. With that, we'll do the probability analysis. Okay, expected value, we'll see, don't worry. Fine. Now you have to understand how we are going to manage the stock out risk. Yeah, I told you we are going to study the risk of stock out through probability analysis, but how? Okay, that's what we have to understand, isn't it? So let me tell you, see, we have a concept of safety stock. Yeah, we have a concept of safety stock. See here, by maintaining safety stock through probability analysis of past stock out. As I said, we are going to study the stock out risk. Yeah, and how we are going to do that? Through probability analysis. Yeah, and the data will be past history of our organization when there were stock out in our store. Is it clear? So we'll do that, and we will maintain safety stock. Now what is this safety stock? See, it's really simple. Safety stock is the level of stock of any item which is maintained in excess of lead time consumption. It is kept as cushion against any expected demand for that item. Okay, see here, safety stock level is nothing but just a minimum stock level only. Okay, it's minimum stock level only, and it is the extra stock that you keep. See here, safety stock is known as buffer stock. It is also known as buffer stock also. See here, this was the reorder level, right? Isn't it? Now minimum level will be below over here, right? So the stock below the minimum level, let's just say minimum level is set at 200 kgs. Fine, 200 kgs. Fine. So now that 200 kgs is what? That's safety stock level. That is safety stock. Is it clear? So the more safety stock you keep, the higher will be the reorder level. Okay, and lower will be the stock out risk, because if you're keeping the reorder level higher, then there will be more quantity over here, which you can use in case of sudden demand and all, isn't it? Whenever unexpected demand will come, then you will have enough quantity over here. Is that clear? So we maintain safety stock, and understand safety stock is built in with the reorder level only. As I said, yeah, it will be below the minimum level. Fine. Yeah, so that's the thing about the safety stock. Now how much safety stock should be kept? You have to understand. See here, when we keep the safety stock, it's extra stock that we keep, right? So when we keep the safety stock, you have to understand we'll have to store that stock. Yeah, so our carrying cost will increase. If safety stock increases, carrying cost of that safety stock will increase, because we have to store the safety stock and that associated expenses that you incur along with that. Okay, so all that will increase. Fine. But you have to understand, when safety stock increases, the risk of stock out decreases. If risk of stock out decreases, then you have to understand there will not be so much consequences of stock out. Yeah, it will be less. So because of that, cost of stock out will be less. Do you understand this? Yeah, there is inverse relationship between safety stock and stock out cost. If safety stock increases, stock out cost decreases. But carrying cost and safety stock are directly related. Okay, if safety increases, carrying cost will increase. Is it clear? Then same way, safety stock decreases, carrying cost decreases, but the stock out cost will increase. Is that clear? See here, keeping more safety stock will increase carrying cost as it needs more storage space. Fine. Okay, so what are we going to do? So what we have to do is we have to make a trade-off between the two extremes. We can't keep too much of safety stock and too little of safety stock, right? These are two extreme situations. We can't do that. We have to make a balance. We need an optimum safety stock. Now, how will we calculate safety stock? There are so many formulas to calculate safety stock, but in our syllabus of CA Intermediate, what we have is we'll do probability analysis. Okay. Now, through probability analysis, we will calculate, we'll have different scenarios. 5, 6, 7 scenarios can be there in exam. Okay, which means cases. Okay, so in that we will calculate stock out cost and carrying cost, and then we will add both of them, we'll get total cost, and then we'll select the scenario in which the total cost is minimum, which means both stock out cost and carrying cost are minimum. Okay, at that level, we'll select the safety stock. Is it clear? Optimum safety stock we have to maintain. Okay, we need to make a trade-off between the two extremes. We can't keep too much of safety stock or too little of safety stock. We need balance. Is it clear? Fine. So now how will we calculate stock out cost? It's really simple, don't worry. See here, we call this as expected stock out cost, because as I said, we are doing probability analysis. Okay, this is not sure cost. Yeah, stock out cost per unit will be given to you in the question, and stock out units, we will calculate that. Okay, we'll calculate that by multiplying it with the probability percentage. Fine. When we'll solve the sum, you will see how simple it is. Don't worry right now. Okay, so this is the expected stock out cost. Fine. Okay, And then carrying cost of safety stock also we need to calculate, which is the safety stock quantity. Okay, whatever safety stock is there in that scenario, you will take that into carrying cost per unit per annum. Fine. Do you remember in EOQ what we used to do? In EOQ we used to take average inventory, isn't it? How we used to calculate average inventory? We used to take the EOQ or the reorder quantity divide by 2. We used to get the average inventory. But here it's not like that. Here we are not carrying average inventory. We are carrying the safety stock entirely. Okay, so we will not do quantity divided by 2. Okay, we will not calculate average inventory. Directly take the number of safety stock, okay, the quantity of safety stock, and multiply it with the carrying cost per unit per annum. Is it clear? Fine. And then you will add it up. You will get the total cost. Wherever the total cost is minimum, you will select that safety stock, and that would be your optimum safety stock. Now don't worry, I have just given you an overview over here. When we will solve the problem right now, you will see how simple it is. Okay, so now let's just go to a problem and let's just see how we are going to calculate optimum safety stock and how this probability analysis will be done of this. Okay, it's really simple and straightforward. Don't worry. Stock out basically means we just don't have sufficient stock. Okay, insufficient stock, right? We have insufficient stock, and then yeah, that's all. Okay, so let's just go to a problem. Now see, here we have our first problem of inventory stock out, and this question is from the ICAI study material illustration 7 of material costing chapter, and here we have been asked to calculate optimum safety stock. It's very simple and straightforward. We will read the question now and we'll understand how we will calculate this optimum safety stock through probability analysis. So let's just begin. Now see here, illustration 7. Messrs. Tyrotubes trades in four-wheeler tires and tubes. It stocks sufficient quantity of tires of almost every vehicle. In year-end 2022-2023, the report of sales manager revealed that Messrs. Tyrotubes experienced stock out of tires. They have been experiencing stock out in the past year. That is what has been revealed from the report of sales manager. Do you understand? Yes. And then here we have been given the stock out data. See here, the stock out data is as follows. I told you we do probability analysis based on past history of the stock out that has happened in the company. Based on that, we forecast the stock outs, right? Based on that, we calculate optimum safety stock, isn't it? Yes. So you have to understand this data first properly. See here, when the stock out happens when we are not able to supply the sufficient stock because of insufficient inventory. Yeah, I told you now, we had 1000 kgs of raw material, 1500 order came. Yeah, we had to supply 1500 to production department, but we don't have that. We just have 1000. So there is a shortage of 500. Yeah, now they are saying, similar to that example, they are saying that there was a stock out of 100 tires. Yeah, they didn't have 100 tires, and this has happened 2 times in the past year. Number of times of stock out, 2 times. 2 times it has happened that there was a demand, and this company, Tyrotubes, they couldn't supply 100 tires. They couldn't supply 100 tires because of insufficient inventory. They had stock out. Okay, stock out of how many units? I told you how to calculate stock out units, right? How do you calculate that? Consumption during lead time or demand during the lead time minus the reorder level. Yeah, we calculated this 500 kgs now. This is the stock out quantity, stock out units we can say. So that's what they have given you over there, 100. Okay, so 100 shortage happened, and this happened 2 times in the past year. 80 units shortage happened, 80 units stock out happened, and this happened 5 times in the past year. So different scenarios have been given to you. 50 units, 50 tires stock out happened 10 times in the last year. 20 tires stock out happened 20 times in the last year. Okay, and 10 tires stock out happens 30 times in the last year. And then there was no stock out at all during the huge demand, and this happened 33 times in the last year. There was huge demand, there was unexpected demand, but we had sufficient stock, due to which there was no stock out at all, and this was 33 times. So what we do is, we add up all of this. Number of times is there now. We add up all of that, and that comes out to be 100. 2 plus 5 plus 10 plus 20 plus 30 plus 33, that comes out to be 100. So then we take probability of this. Number of times this has happened now, these scenarios. So we take probability of this. So how will you calculate probability? Really simple. 2 divided by 100, 5 divided by 100, 10 divided by 100. Okay, that is what we will do, and we'll get the probability. Okay, 2 by 100, 0.02, or you can say it's 2%. 5 by 100, 0.05, or you can say 5%. Here 0.10, 0.20, 0.30, 0.33. Yeah, is it clear? All of that should be equal to 1, isn't it? Yes, or you can say all these are percentages: 2%, 5%, 10%, 20%, 30%, 33%, and all of that should be equal to 100%. Yeah, so this is the probability. Yeah, probability of these things happening once again, right? Yeah. So now they have asked us, see here, Messrs. Tyrotubes loses 150 per unit due to stock out. So here they have given us what? They have given us stock out cost per unit. I told you, yeah, stock out cost per unit will be provided to you in the question, isn't it? While explaining the concept, cost of stock out per unit will be given. So it is given, as you can see over here. Is it clear? Simple. And then they are saying, and spends rupees 50 per unit on carrying of inventory. So this is what? Carrying cost. Okay, this is your stock out cost per unit, and this is your carrying cost per unit. Is it clear? Determine optimum safest stock level. So now we have to calculate what would be the optimum safety stock. How do we calculate optimum safety stock? You all know what we need to do. At all the scenarios, we have to calculate, expected stock out cost, and we have to calculate carrying cost of safety stock, add both of those and calculate total cost, right? Total cost of each of these scenarios, and then we have to select the minimum one, and that minimum one, at that point, whatever the safety stock will be there in that scenario, that safety stock will be the optimum safety stock, because optimum safety stock is where both stock out cost and carrying cost are minimum. That is what we have to do. Okay, we have done complete analysis of the question, so we have to solve the question now. But now you have to understand one thing. Okay, see here, stock out happened of 100 tires. Let's just say we had maintained safety stock of 100 quantity, then what would have happened? If you would have maintained safety stock of 100, then this stock out wouldn't have happened. We have extra stock of 100 quantity. Yeah, so we could have taken the tires from there and then just fulfilled the demand, so there wouldn't be any stock out. You understood, right, the purpose of safety stock? Safety stock kills the stock out. Safety stock avoids the stock out. Not completely, it manages it really, because you can't say what can happen, right? There can be huge demand and there can be stock out even after maintaining the safety stock. Is it clear? Yeah, so that's the thing. So let's just go to the solution now. Let's just solve this question and properly understand this. See, here we have the solution. It's very simple and straightforward. Here the question has asked us to calculate optimum safety stock, and you all know optimum safety stock is the point where expected stock out cost and carrying cost are minimum, which also means total cost should be minimum, because total cost is nothing but just the sum of these two. Okay, that's the objective of this question. So when we find the minimum total cost, at that point, when we see what is the safety stock we have maintained, and in that case, that safety stock will be our optimum safety stock. Is it clear? Yes. So this is the objective, and the calculation we have to do through this table, computation of stock out and inventory carrying cost. It's really simple. Don't worry, I will explain you each and everything in very basic way. Okay, so now how we have to begin this? It's really simple. You have to see the past data over here. See, here they have given you the stock out that has happened, right, and number of times this has happened, and I told you we have to calculate the probability over here, which is nothing but just you have to take the number of time it has happened out of the total occurrences. Okay, 2 divided by 100, 5 divided by 100, 10 divided by 100. Yeah, you will calculate the probability of each of the scenarios. Is it clear? Okay, then what we are going to do is we are going to start assuming safety stock. How will we assume safety stock? Just like that? No, it's not just like that. You have to see the data over here. Stock out has happened over here in this first scenario as 100, right? So in the case 1, which we will call this, okay, in the case 1, we are going to assume safety stock of 100, and then we'll check if we are maintaining safety stock of 100, how much stock out is happening in each of these scenarios. That is what we are going to check. Okay, so let's start. See, it's really simple. Let's just say safety stock in the case 1 is 100 only. Okay, so safety stock in the case 1 is 100 units. We have kept extra units 100 with us. Okay, so let's just say there is a demand of 100 units. If there is a demand of 100 units from the production department needs 100 units. Okay, so we have 100 units with us, isn't it? Yes. So easily we can fulfill that demand. From the extra stock, we'll take the 100 tires and send it to the production department. So there will not be any stock out in the first scenario. What about the second scenario? If we get a demand of 80 units, will we be able to fulfill? Of course. We have 100 extra. We can fulfill second scenario also. Let's just say third scenario, 50 demand is there. We have extra units, 100 kept with us. Yeah, safety we have assumed 100. So yes, we can fulfill 50 also. We will still have 50 remaining with us, isn't it? Let's just say this scenario, fourth scenario. Yeah, 20 demand has come. So of course we can fulfill. We have 100 with us. Here also we can fulfill. Yeah, and 0 is just leave that. Okay. So in all of the scenarios, we can fulfill the demand if we are maintaining safety stock of 100. Yeah, do you agree? Yes, really simple, which means there will never be any stock out. Stock out will be 0. Is it clear? Stock out will be 0. Is that clear? And what are the chances of stock out being 0? Stock out 0 chances are 33%. 0.33 means 33%, you can say. It's 33%. So you will take it over here in probability column, 33%. Is it clear? Simple and straightforward. Stock out cost you need to calculate, but here there is no stock out units at all. Yeah, no stock out happened because we had maintained safety stock of 100. We could fulfill all the demand in all the scenarios, right? There is no stock out at all. So stock out into 150, which is stock out cost per unit, it is 0 only. Expected stock out cost, how do we calculate this? We just take the stock out cost, the actual, into the probability, we get the expected value. This is also 0 only. Fine. Now carrying cost also 0? No, it's not like that. Carrying cost cannot be 0 because understand, we are keeping safety stock. We have to store this. We have to incur the associated expenses with this, right? So that is why we will take this 100 and multiply with the carrying cost per unit per annum, which is rupees 50. So 100 into 50, that is 5,000. Is it clear? Simple. So you will add these two, that would be the total cost, 5,000. Clear? Simple and straightforward. So case 1 is over, where we assumed our safety stock to be 100 units, 100 tires. Fine. Now let's move down. Let's just say we are assuming safety stock as 80. Okay. Now you have assumed, that's fine. That's your case 2 now. You have assumed. Now what you have to do? Do you remember what we have to do? We have to check the safety stock with all the scenarios. With all the scenarios. Yeah. Let's just say in the scenario 1, demand is of 100. You have how much? 80 extra stock, right? Safety stock extra, how much you have? Just 80. So can you fulfill this demand? Can you fulfill? No, you can't fulfill. You can just fulfill 80 in this 100. Remaining 20 will be stock out. Remaining 20 will be stock out. See here. Remaining 20 will be stock out. What are the chances of this happening? What are the chances of happening stock out of 20 when you have maintained safety level, safety stock of 80? What are the chances of this happening? Chances are 2%. Why 2%? See, it's really simple. When demand came of 100, then only this 20 stock out happened. Now you have maintained 80. Keep that in mind. You have maintained safety stock of 80. That's fine. But when did this happen? 20 stock out with this safety stock of 80. When did this stock out happen? It happened when demand came of 100, and demand of 100 coming, the probability of that is 2%. Is it clear? This is how you have to take. Most of the students think that that stock out is 20. Okay, fine. Just look over here. Stock out is 20. Okay, it's 20%, right? 20% over here. No, it's wrong. It's messed up. Okay, don't do it like that. It's wrong. What you have to do, you have to think, what is the probability of happening this stock out 20? When did this happen? If you are maintaining 80 safety stock, if you are maintaining 80 safety stock, in the first scenario, we are not able to fulfill. Demand was 100. That is why we are having stock out over here. And probability of getting demand of 100 is 2%. Is it clear? Do you understand this stock out 100? This is a demand which came, they were not able to fulfill. Okay, fine. Moving on. Then what we have to do, we have to calculate stock out cost. How do you calculate stock out cost? You all know, right? I'm coming back, okay? I'm coming back to 80 also. I have to just complete this calculation. Fine. So see here, 20 into 150, that's equal to 3000. Okay, stock out unit into stock out cost per unit, that's 3000. And then you will take the stock out cost, multiply with probability, you will get expected stock out cost, which is 60. Now you have to understand, this is the actual stock out cost, okay, if we have stock out of 20. But here we are doing probability analysis, which means, you know, we are doing everything on the expected values, yeah, on probability basis. That is why we are multiplying this with the probability. Just 2% chance is there of this happening. So if we multiply that, then this expected stock out cost is 60. Is it clear? Fine. And then we have to calculate the carrying cost. How will you calculate carrying cost? We are keeping 80 safety stock. 80 into rupees 50, that is equal to 4000. Is it clear? Simple. So 4000 plus 60, that is 4060. Is it clear? Simple and straightforward. Now, here I just told you about the first scenario, right? If you are maintaining safety stock of 80 and demand came of 100, then we have a stock out of 20. What if demand came of 80? Will there be stock out? No, because we have extra stock of 80, we can easily fulfill the 80 demand. We have extra stock of 80, even if 50 comes, we can fulfill, 20 comes, we can fulfill, 10 comes, we can fulfill, isn't it? Yeah, it's logical, right? Yeah. So there will just be problem with the first scenario only if we keep safety stock of 80. Only in the first scenario, if demand comes of 100, then only we'll have a problem. 20 stock out will happen, and that calculation we have done. Is it clear? This is how you have to do. You have to assume the safety stock and check with all the scenarios what is happening. Is there stock out? Is there stock out? Yeah, you have to check this. Fine. Now you will see when we will assume the next case. Now let's just say the case 3 is we are assuming safety stock to be 50. If we are assuming safety stock to be 50, then understand, let's just go reverse. Let's understand this. If we are maintaining safety stock of 50 extra stock we have, demand is of 10, let's just say, yeah, in this fifth scenario. If demand is of 10, can we fulfill? Of course we can fulfill. We will take the 10 tires from our safety and fulfill the demand. Yeah, we will send to the production department, right? There will not be any stock out. If 20 demand comes, again we will take from the safety and there will not be any stock out. 50 demand comes, still we have 50 in our safety, we can easily fulfill, there will not be any stock out. But in the first two cases, when the demand is of 180, what will happen? If demand is of 100, then see, we can only fulfill 50 out of that. The remaining 50 will be stock out. Do you agree? Logical, right? See here, 50 safety we maintained. In the first scenario, 100 demand came. We have to send 100 to the to production department. Can we send 100? We don't have inventory. From the safety we can take only 50 tires. That's what we have maintained, 50 only. So 50 we can send to the production department. Remaining 50 will be stock out. Is it clear? Do you understand this? What is the probability of this happening? What is the probability of getting 100 demand? What is the probability? Probability is 0.02, 2%. Okay, it's 2%. Do you understand this? Simple. Now let's just say demand is of 80. If demand is of 80, yeah, and we are maintaining safety of 50, then you know shortage will be 30 units, isn't it? See here, shortage will be 30 units. We will not be able to fulfill 30 tires. Yeah, we cannot send 30 tires. We only have 50. We have sent 50. Remaining 30 from this 80 will be stock out, shortage. What is the probability of this happening? What is the probability of getting 80 demand? It is 0.05. Based on the past history, we are taking the probabilities. Okay, it's 0.05 because it has happened 5 times that there was a demand of 80 and we had a stock out in the past year. Okay, that's the logic. Fine. So now this is the thing, and then there is no stock out when 50 demand is there, right? You know that. So only these are the two scenarios, scenario 1 and 2, where we have a stock out. In 1 it is 50, in 2 it is 30. Is it clear? Now you have to do the calculation, which is very simple. You have to calculate the stock out cost. which is nothing but 50 into 150, 30 into 150, you will get 7,500 and 4,500. And then you have to calculate expected stock out cost, which is nothing but 7,500 into 2%, which is 150. Let me just show you. 7,500 into 0.02, that is equal to 150. And then here 4,500 into 0.05, that is equal to 225. Is it clear? Simple. Then you just have to add it up. Okay, stock out cost is 12,000. Okay, that is not relevant for us. Relevant is expected stock out cost. 150 plus 225, that's 375. Because this is probability analysis, we are taking expected values only. So 375. Okay, and then here it's 2,500. Fine. If we are maintaining 50 safety, so 50 into 50, that's 2,500. 375 plus 2,500, that's 2,875. Clear? Easy. So we are done with case 3. There are 3 cases. Now case 4, we have to go down. If we are maintaining safety stock of 20, what will happen? If we are maintaining safety stock of 20, what will happen? Let's just say there is a demand of 10 tires. Can we fulfill that? Safety is how much? 20. Of course we can fulfill. We can send 10 tires and production will be running smoothly. 20 tire demand comes. What will happen? Again, we can fulfill that. We have 20, we can fulfill 20, no problem at all, no stock out. In these 2 cases, there will not be any stock out. But if the demand comes, okay, understand properly, if the demand comes of 100, what will happen? There will be stock out of 80. Because 20 you supply to production department, remaining 80 out of this 100 you cannot supply. So 80 will be stock out in the first scenario. Okay, 20 safety stock you kept, 80 stock out happened in the first scenario. What is the probability of getting a demand of 100? It is 2%. It's 2%. Is it clear? This is how you have to do it. You assume the safety stock, then check with all the scenarios. Okay, next. We have 20 in our safety stock and let's just say demand is of 80. Can you fulfill 80? No, you can fulfill only 20 out of that. Remaining will be what? Remaining will be stock out. Remaining 60 will be stock out. Is it clear? 80 was there, 20 you fulfilled, remaining 60 is stock out. It's shortage, you cannot fulfill that, right? What are the chances of that happening? What are the chances of you getting 80 demand? It is 5%. Clear? Easy. Next 50 demand. If you get 50 demand, then the stock out will be of 30 units, right? 20 units you supplied, 20 tires, 30 tires you cannot supply. There is a shortage, stock out, right? So 30. What are the chances of this happening? Chances are 10%, 0.10. Okay, it's 10%. Is it clear? Simple and straightforward. Now the same way you have to do the whole calculation. Okay, stock out cost you have to calculate. You all know what you have to do. Stock out units into 150, you will get all these figures. If you add that up, that's equal to 25,500. Clear? Then how will you calculate expected stock out cost? Really simple. Just take this value separately, multiply with the probabilities, you will get this. 12,000 into 2%, that's 240. 9,000 into 5%, that's 450. 4,500 into 10%, that's 450. Add up all of that, you will get the total expected stock out cost, that is 1,140. And then here carrying cost. How will you calculate the carrying cost? You will take the safety stock into 50. Okay, 20 into 50, that is 1,000. Is it clear? This is the carrying cost of safety stock. Then you will take a sum of these two, expected stock out cost and carrying cost. You will get the total cost. You all know. Simple, easy. Fine. Now moving on, next we are going to assume safety stock of 10. If we take safety stock of 10, then what will happen? If we take safety stock of 10, then there will be stock out in all the above cases. Here also stock out, here also stock out, here also stock out, here also stock out, isn't it? See here, it's really simple. See, understand, if there is a demand of 10, then there will not be any stock out because we have 10 tires in safety, easily you can fulfill. But in all the above cases, there will be what? There will be stock out. In first scenario, there will be stock out of 90 tires. Here it will be 70 tires. Here 40 tires stock out. Here 10 tires stock out. Isn't it? You understood right now, yeah? Yeah? Till now you should have understood, okay? It's really simple now. I have explained everything. See here. In the first scenario, you just have 10 in safety. In the first scenario, demand is 100, 90 stock out. Demand is 80 in the second scenario, 70 stock out. 50 demand is there in the third scenario, 40 stock out. Okay, here 20 demand is there in the fourth scenario, so 10 stock out. Okay, that's how you have to do this. Okay, now what are the probabilities of this happening? It's really simple. See, first scenario probability is 0.02, second scenario 0.05, third scenario 0.10, yeah, and then 0.20 for the fourth scenario. Is it clear? In the fifth scenario, 10 is there, so you can easily fulfill that, no stock out, and 0, just leave that. Okay, you understood now? Now the same calculation you have to repeat now. Okay, take this values, multiply with 150 separately, you will get all these figures, make a sum, you will get 31,500, and then expected stock out cost the same way. Yeah, take the stock out cost separately, multiply with probabilities, you will get this, take a sum, you will get the expected stock out cost in total, and then carrying cost, you can calculate 10 into 50, that is equal to carrying cost of carrying 10 safety stock. Yeah, 10 tires, and then just make a sum of these two, you will get the total cost. Is it clear? Yes. And then you are assuming safety stock to be 0. You are not keeping the safety stock at all. If you are not keeping the safety stock at all, then what will happen? You will have stock out in all the cases. Yeah, here the demand is 100 stock out, demand is 80 stock out, 50 is the demand, 50 stock out, because you are not keeping any, what do you say, any safety stock. Whatever demand is coming, all is stock out. We don't have inventory, 20, we don't have 10, we don't have 10 stock out. Okay, that's the thing. See here, 100 stock out, 80 stock out, 50 stock out, 20 stock out, 10 stock out. Yeah, so the chances of this happening is, see, first scenario 2%, 5%, 10%, 20%, 30%, right? So all that you have to take, right? And if there is a demand of 0, then there will not be any stock out, because we don't have any safety, there is no any demand. So that's the thing. Is it clear? Is it clear? Fine. So that last calculation will not happen because it's 0, 0 only. And yeah, this is the thing. Fine. So the same way you have to do the calculation, stock out units into 150 separately, you will get all these values, make a sum, it will be 39,000. And here what you will do, you will take this and multiply with the probability, you will get the expected stock out cost. Okay, make a sum, it is equal to 2,700. And here carrying cost is 0. Why carrying cost is 0? Because you have not maintained any safety stock. There is nothing to store and all. Yeah, so entire this thing will be 0. Carrying cost will be 0. So 2,700 will be the total cost. Fine. Now you have to do the comparison, which is the lowest. Okay, see here, 5,000, 4,060, 2,875, 2,140, 2,195, and here it is, sorry, yeah, 2,195, and here it is 2,700. So which is the minimum? The minimum is this one, right? This one is the minimum. This is the minimum, right? So this one will be the safety stock level. At safety stock level of 20 units, yeah, if you are maintaining 20 safety stock, our total cost is at minimum, where our expected stock out cost is 1,140 and our carrying cost is 1,000. So this will be our optimum safety stock. Is it clear? And this is the working note for calculation of the probability, yeah, which I have done over here only. Is it clear? I hope you have understood this question. It was really simple and straightforward. You have understood now how to calculate the optimum safety stock through this table, how you have to interpret things, yeah, how you have to, assume the safety stock and then check it with all the scenarios, and then how to check the probabilities also, right? So all the things you have understood now. Fine. So that's all for this video. If you have any doubts in this, please comment down below, and I will definitely respond to you, or you can also message me on Instagram. So that's it for this video. See you in the next video. Bye.